Imagine a world where artificial intelligence drives the stock market. Sound like science fiction? Think again. Artificial intelligence is no longer a concept confined to the pages of science fiction novels or the frames of futuristic movies. It's here, it's real, and it's reshaping our world, including the stock market. The role of AI in the stock market is increasing by the day, marking a significant shift from traditional human trading to algorithmic trading. Algorithmic trading, for those new to the term, is a process where pre-programmed computer models, powered by artificial intelligence, execute trades at lightning speed. They can process vast amounts of data, identify patterns, and make decisions faster than any human ever could. In a market where milliseconds can mean the difference between profit and loss, AI's speed and accuracy give it a distinct advantage. Artificial intelligence is also revolutionizing how we analyze market trends. Gone are the days when traders would pore over charts and graphs for hours, trying to discern patterns and make predictions. Today, AI algorithms do that in seconds. They can sift through mountains of data, spot trends, and even predict future market movements with a degree of accuracy that was unimaginable a few years ago. But it's not just about speed and accuracy. AI brings a level of objectivity to the trading process that's hard to achieve with human traders. It's immune to the emotional roller coaster that often influences human decision-making in the stock market. When AI makes a decision, it's based purely on data, not on a gut feeling or a hunch. So, we're looking at a future where AI plays an increasingly dominant role in the stock market. It's a future where trades are executed faster and more accurately, where market trends are analyzed with a level of precision that's unheard of, and where emotional bias is taken out of the equation. So the question isn't whether AI will influence the stock market, but how much and in what ways. But what exactly are AI stocks? Let's delve into this. Artificial intelligence, or AI stocks, are those belonging to companies that are either developing AI technology or are heavily reliant on AI for their operations. Now you might be thinking, that sounds like a lot of tech companies, and you'd be correct. But when we talk about AI stocks specifically, we're referring to companies that are at the forefront of AI technology, pushing the boundaries of what's possible with machine learning and data analysis. For instance, consider a company like Tesla. While primarily known for their electric cars, Tesla's self-driving technology is a prime example of AI in action. Similarly, companies like Google with its AI-powered search engine and Amazon with its AI-driven recommendation system are also considered AI stocks. Even companies not traditionally seen as tech companies, like healthcare giant Johnson & Johnson, are getting involved in the AI game. They've been developing AI-driven surgical tools, showcasing how AI is permeating industries far and wide. But why should you care about AI stocks? Well, it's all about potential growth. According to a report from Grandview Research, the global AI market was valued at approximately $72 billion in 2020. And it's projected to expand at a compound annual growth rate of just over 40% from 2021 to 2028. That's an astronomical rate of growth that could translate into significant returns for investors who choose the right AI stocks. However, it's not all sunshine and rainbows. Investing in AI stocks also comes with its fair share of risks. These are often high-growth, high-volatility stocks, meaning their prices can swing wildly in short periods. Plus, the AI industry is still relatively new and unproven, and it's subject to regulatory uncertainties and intense competition. In essence, investing in AI stocks is a bet on the future of technology. So how do you decide which AI stocks are worth investing in? A question on the minds of many potential investors, and rightly so. Diving into the world of AI stocks isn't as simple as picking the company with the coolest logo or most futuristic name. It requires a careful evaluation of several key factors. Firstly, consider the company's financial health. Look at factors like their revenue growth, profit margins, and debt levels. A company with steady revenue growth, high profit margins, and low debt is likely to be more stable and less risky. But don't just look at the numbers. Understand the story behind them. Has the company recently launched a successful product? Are they investing heavily in research and development? The answers to these questions can provide valuable context. Next, assess the company's competitive position. Are they a leader in their field, or are they struggling to keep up with the competition? A company that's leading the way in AI technology is likely to have a competitive advantage, which can lead to higher profits and more growth opportunities. Also, consider the potential growth of the AI market. artificial intelligence is expected to be a major driver of economic growth in the coming decades. Companies that are well-positioned to capitalize on this trend could provide substantial returns for investors. However, it's important to remember that the market's potential growth is just one piece of the puzzle. It's equally important to consider whether the company has a strategy in place to tap into this growth. Lastly, it's crucial to consider the management team. A company with a strong visionary leadership can drive innovation, maintain a competitive edge, and navigate through periods of uncertainty. In addition to these factors, investors should also consider their own risk tolerance and investment goals. Investing in AI stocks can be risky, but it can also offer substantial rewards for those who are willing to take on some risk. Remember, when it comes to investing, due diligence is key. Take the time to thoroughly research and understand the AI companies you're considering. Making informed decisions can help you successfully navigate the exciting yet complex world of AI stocks. Now, investing in AI stocks isn't without its risks. Indeed, as with any investment, it's crucial to consider the potential pitfalls. In the realm of AI stocks, these risks can broadly be categorized into regulatory, technological, and market risks. Let's start with regulatory risks. The AI industry is relatively nascent, and as such, it's subject to a considerable degree of regulatory uncertainty. Governments and regulatory bodies worldwide are grappling with how best to oversee this rapidly evolving technology. Policies and regulations can change swiftly and sometimes unpredictably, which can have significant implications for AI companies, and by extension, their stock prices. Next, we have technological risks. AI is a cutting-edge field, and while this means there's immense potential for growth, it also means there's a lot of unknowns. Companies may face hurdles in developing or implementing their AI technology. It could be a technical glitch that takes longer to fix than expected, or a major breakthrough by a competitor that makes a company's own technology obsolete. Either scenario could lead to a slump in the stock price. Finally, there's market risks. The stock market is influenced by a multitude of factors, many of which are beyond the control of individual companies. Economic downturns, geopolitical events, and shifts in investor sentiment can all impact stock prices. AI stocks, like any other, are not immune to these broader market forces. Moreover, it's worth noting that AI stocks can be particularly volatile. The hype surrounding AI can lead to inflated expectations and overvaluation, which can then result in sharp price drops when those expectations are not met. So, as you can see, investing in AI stocks is not for the faint-hearted. It requires a thorough understanding of the industry, a keen eye for potential red flags, and above all, a healthy tolerance for risk. While the potential rewards are high, so too are the risks. So, what does the future hold for AI stocks? As we look ahead, it's clear that artificial intelligence is not just a passing trend. It's here to stay, and its influence is only set to expand. From healthcare to finance, transportation to entertainment, AI is becoming an integral component of countless industries. This permeation across sectors bodes well for the future of AI stocks. Consider the healthcare industry. AI is revolutionizing the way we diagnose and treat diseases. It's enabling doctors to analyze complex medical data faster and more accurately, leading to improved patient outcomes. As AI continues to transform this sector, we can anticipate a positive impact on the stocks of companies leading the way in medical AI. Then there's transportation. Autonomous vehicles are no longer a futuristic dream, but a reality we're inching closer to every day. As AI becomes more advanced and autonomous vehicles become more commonplace, companies at the forefront of this technology are likely to see their stocks soar. We can't talk about AI without mentioning the tech industry. From virtual assistants to facial recognition technology, AI is transforming our digital lives. Tech giants are investing heavily in AI, and this is likely to fuel their stocks' growth in the coming years. However, it's not just these sectors. AI is permeating every industry you can think of. As more companies adopt AI to improve their operations, the stocks of AI providers will likely benefit. Of course, the future is never certain, and the same applies to the AI market. But one thing is clear: AI is not a passing fad. It's a transformative technology that's reshaping our world, and its influence is only set to grow. So, when you're considering where to invest in the future, AI stocks should be on your radar. They offer the potential for significant returns as AI continues to transform various industries. In the end, the future of AI stocks, like the technology itself, is full of possibilities.